You may have to fight a battle more than once to win it. Margaret Thatcher. My friends, no matter how many times you have to fight the battle, if you continue to fight, you will win. All it takes is 10 to 15 minutes each and every day these markets are open to do what? To learn the nuances of the charts you're interested in. For those of you who are new, we cover the S&P 500, which is down for the day, the NASDAQ 100, which is down for the day, 20-year bonds, which are up, gold, which is up, and Bitcoin, which is down. We cover these charts every day, but what we teach and what you learn here can be applied to any chartable stock or ETF. That's what this is all about. Our Patreon levels, of course, offer you even more. Charting Made Simple, wait a minute, that's Options Made Simple, the Charting Wealth way. That is one of the bonuses that our Patreon members get at any level, plus the live question answer call-in session. And we also help you backtrack the stocks you're interested in, practice trading and all those things. That happens once a month live, the first Wednesday of every month. And also the big thing, the biggest thing I think we probably do to help the most are our 20 weekly vertical crossovers, 10 up, 10 down, that we give you each and every week on the S&P 500. Now, last week was the first time we didn't have 20. We usually have 20. Last week, just not a lot going on in the market, not a lot of crossovers, but it always gives you something to practice, trade, and to learn from. Now, let's jump into these charts. S&P down a little bit, a little less than 0.5% down. We see that the price percent oscillator is flat. Derivative oscillator gaining a little upward momentum. Green up candle drawing for the week a higher high. Didn't happen today, it happened on Monday. Look at the 2-day. You can see the price percent oscillator trying to pull away from the red signal line. We had that, of course, 2-day crossover back on Friday the 23rd. And as we look at things, what do we see happening? Well, we can see that the high on, around the close on Friday, somewhere around the 430 something mark, high during the day 441. And again, we need to go ahead and redraw our trend line here now that this candle's finished drawing. If you try to draw your trend line earlier when a candle's still drawing as it was on the Monday candle, the latest candles, of course, then Monday, Tuesday. If you try to draw the trend line before the candle finishes drawing, you'll see that it knocks itself off. So you got to wait for that to happen before you can redraw it. Derivative oscillator, though, that's the leading indicator. It's a triple smooth version of the relative strength index. That's why we use it, because it's a leading indicator versus a lagging indicator like the price percent oscillator. That's why we team those two up and it works so effectively. It is still gaining downward momentum. So that's something to at least put into the mix. We look at the half-day chart. We can see where things peaked out on Monday afternoon and then down Tuesday morning and afternoon, pushing through that half-day trend line. So again, still heading up. Derivative, or basically flat, but still up as far as the price percent oscillator and the derivative oscillator goes. So keep your eye on the prize there. We'll see what happens with things, of course, on Wednesday, but we can tell that we still don't have a crossover going up, even with that 2-day crossing over going up. It is not a recross. It is simply a crossover. And again, we'll see just what happens as we move through time and if this is going to weaken or is going to build. And eventually, and again, this has been negative for a long time. We have what's called a divergence. That is, prices way up. And of course, the derivative oscillator, the price percent oscillator, is down and refusing to cross. Means, of course, that there is some inherent weakness there in price movement. Now, let's go to the Qs. What do we see there? We see the Qs down quite a bit more, over 1% for the day. And as we look at the price percent oscillator, it is flat. Derivative oscillator losing momentum. We do have a green up candle, But of course, last week we had a red spinning top. That's where things ended on Friday the 23rd. The high during the course of the week was 368.48, 368.89. So we pumped a little bit higher this week. What do we see on the 2-day? Weakening there on the price percent oscillator. Derivative oscillators now 4 days in the red. And we have a much weaker candle that has finished drawing. And again, let's see, is there some way we can connect something? No, not really. We really can't connect anything other than 2 candles. Remember, the rules on drawing trend lines, bottom up, top down. So when things are going up, you draw them from the bottom, and you like to be able to connect 3 or more candles to feel good about your trend line. And again, if all you can connect is 2, that's all you can connect. Doesn't mean you put a lot of strength or hope in it. We leave the 2-day and we go to the half-day, and we can see where things are down in the morning, a little further down in the afternoon, pushing through that 2-day trend line as far as the wicks on the bottom go. Price percent oscillator still hasn't crossed over, appears to be headed that way. Derivative oscillator losing momentum throughout the course of the day. So that's where we are on the NASDAQ 100. We will continue to watch and see as things move and plug along. And of course, if and when this 2-day chart does cross over, of course, that would be your pulling out point. Hasn't happened yet. You can sure pull out any time before then too. But again, if that does offer itself to you, of course, that would be wonderful. We'll continue to watch and see how things develop on the NASDAQ 100. Let's move on to bonds. Bonds rebounding up 1.05% for the day. We've seen bonds just hang on and not violate that weekly trend line. Also, we've seen here on the weekly, it has stayed positive for quite a while. Derivative oscillator here lately this week has lost a little bit of energy, going lower than the prior ones as they had built energy over several weeks. But that price percent oscillator still nice and strong. Red open box means a slowdown in the up movement, nowhere near the highs of last week, but price moving up the trend line, which is nice. What about the 2-day? Well, it was heading down. It looks like it's heading up a little bit, although that derivative oscillator continuing to lose lots of momentum. What did we get? Well, we previously had some nice big green up candles, a couple of red spinning tops. This latest top is a green. It means indecision, but it's tending up, and look, it's staying above the 2-day trend line. That's good to see. And remember, what are we dealing with here? We're dealing with a 2-day recross. That was our jumping in point quite a ways back in mid-May. Now we go to the half-day. What do we see there? Well, we had the half-day tracking down really hard on us. Price percent oscillator is still negative. Derivative oscillator negative, losing downward momentum. Price percent oscillator appears to be headed up. Throughout the course of the day, we see that the half-day candles have moved up. So again, that's good to see, but no crossover yet. So again, keep your eye on that, but in particular, keep your eye on this 2-day since we're involved in a 2-day recross, and it's been very good to us. Now, we'll go back to the weekly, go to gold. Gold was up, but only 0.18%. Price percent oscillator appears to be trying to pull away from that red signal line heading down. Derivative oscillators losing a little bit of downward momentum. Red candle, solid red candle, not a big one like we've seen for 3 weeks running starting in mid-June, mid-June for 3 weeks. But we have a small red one forming. Let's look at the 2-day. Look at that, just laminated on it. Actually, completely laminated. So we don't have a crossover. It's just laminated. Look at that, 32 and 32. If you look at the left-hand side of the screen, that is a lamination. So we see that the Derivative oscillator is still positive and devolving, but that price percent oscillator is laminated. Just staying right there on the 50 and 200 period moving average line. So we'll see. Maybe gold will bounce off that. Hell if I know. What do we see going on with the half-day chart? Again, we can see another 250 period moving average line where things have bounced off of so far. Up a little in the morning, down a little in the afternoon, like we said, down for the day. Price percent oscillator still heading down a little bit. Derivative oscillator losing some downward momentum. So again, I want gold to rotate over and head up on that weekly so bad, but I can't make it. Although this last one was rather nice, we'll see where gold is gonna go. What about Bitcoin after that huge day yesterday, slacking off a little bit, down 0.61%, but we still have a big green up candle. Don't have a crossover, but it's nice to see one on that weekly sometime soon. Derivative oscillator's been losing downward momentum since it bottomed out back in mid-June, but the price percent oscillator still negative. We'll wait and see if and when that crosses. The 2-day already crossed for us, and of course, we now have two solid, well, not solid green, open box green candles, solid up movement. Let me say that. That's where I was going. The derivative oscillator also has turned green on that 2-day chart. That's good to see. Half day, again, we can see where things bounded up on Monday and then just sort of slacked off on Tuesday. That's where we are on our charts. Thank you so much for being with us. If you're not a subscriber at chartingwealth.com, you're not getting our daily trainings. You're also not getting our daily market, weekly market, and trade worksheets. You can get those for free by simply going to Charting Wealth and signing up for the daily email. That includes this training you're listening to right now, the once-a-week weekly review and forecast, and all the special daily trainings. The one today is fractional shares, the next step after practice trading. I'm sorry, after paper trading. It's still a type of practice trading, but you're using a little bit of real money. Take that training, you'll get a lot out of it. If you're not getting our trainings, then sign up for free. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.